Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is my Forbes colleague, Alan Onsman, who's a senior editor and author of the Current Climate newsletter. Alan, thanks so much for joining me.
Thanks for having me.
U.S. markets have continued to tumble this week amid President Donald Trump's tariff whiplash. He hasn't really done much to quell economic fears. He said we're in a period of transition, and he's also has not ruled out a recession. A company that encapsulates this time and this trend of stock prices plummeting is Elon Musk's Tesla. As we know, Elon Musk is the face of Doge, a seemingly trusted advisor to President Trump, and according to Forbes, the richest person in the world. Monday was a particularly bad day for Tesla. I want to read some reporting directly from one of our colleagues, Derek Saul. Quote, Tesla stock officially traded lower Monday than it did ahead of President Donald Trump's November victory, wiping out what was once a 91% gain for shares of the electric vehicle company run by Trump Lieutenant Elon Musk, as Tesla becomes the face of the ongoing stock market slide. To start off the conversation here, can you explain why exactly Tesla is cratering?
There are many reasons for that. There was what used to be called irrational exuberance around the stock last year after the Trump election, because Musk had been so generous in his financial support for Donald Trump, upwards of well north of $200 million, maybe as much as $300 million in different forms of support. Developing this close relationship with Trump was seen as highly beneficial after Trump won last November, and Tesla shares just exploded. So this incredible run where they go from about $240 a share prior to the election to $479 a share in mid-December. It was just nuts. So it basically doubled, in just over a month. And I couldn't begin to tell you why people were willing to pay that much for it, because nothing had fundamentally changed with Tesla's business. And the problem is Tesla's core business is declining right now. Its core business is selling electric cars, batteries. That accounts for 85 to 90% of its actual revenue. There is some people value it. Elon wants people to value it as an AI company. And because of that, it gets a multiplier effect on the value of the stock. Well, maybe it'll be an AI company someday. But today, its business is building and selling electric cars and batteries. That's it. And that business is declining. In 2024, Tesla posted its first annual decline in sales globally since it became a public company. That trend, unfortunately, is accelerating in Q1 of 2025. All of the numbers coming out of key markets in Europe, in China, and the rumors here in California, which is its top market in North America, that it's down dramatically in all of these markets. China is particularly worrisome because China has become the single biggest source of Tesla's profit. It has lower costs there. It's been put in a very sort of advantaged position by the Chinese government. And so that's allowed Tesla to have very fat profit margins for the last few years. Any sign that China is reversing causes investors and analysts to get very nervous. But the initial data we're seeing from the first quarter of the year is that Tesla's going to have it's going to be an ugly quarter for their sales. So that's one of the problems. And then add to this now the association that Elon has with Donald Trump, which is increasingly negative. And there's a simple reason for that. Tesla's core buyers are not the same as Donald Trump's political base. The company has relied on people who generally identify as Democrats, who care about the environment. It's a higher net worth, better educated customer base in many cases. That group is becoming very put out by Elon's public behavior, his public comments, his association with the Trump administration. So if you are a public company and your core buyer base doesn't really like what the CEO is doing, and the CEO is so incredibly public, is the face of the company, when things get negative, that's, the company's going to take a beating. And of course, we've seen news reports of protests at Tesla stores, boycotts being talked about. Tesla charging stations have been vandalized and set on fire. these aren't good signs for a public company. So, bottom line, his tight association with the Trump administration, combined with a decline in the base business, that's why Tesla's been coming down so rapidly.
Alan, it's really interesting because I largely cover politics, and over the past few months, while President Trump's approval rating really has remained unchanged, Elon Musk's has taken a hit. And I think that's what you're saying here. That can explain in part some of these stock prices taking a tumble here. You've covered Tesla actually since 2006. Have you ever seen anything like this where you're saying, hey, there's going to be a really ugly quarter here, and the stock prices are nosediving in this way?
The company, I've covered them since 2006, and the company's been public since 2010. And periods of volatility are the norm for Tesla. That is absolutely not unusual. What we've seen over really since 2020, that's kind of one point at which everything begins to change. In Tesla's first decade as a public company, it was regularly reporting losses, big losses. And yet the market cap kept rising. In 2020, even though COVID was happening, and so things are generally bad, Tesla opened its Shanghai factory in China. And literally from the beginning of having manufacturing operations in China, the Tesla story really changed, where suddenly the EV business was becoming profitable. And Tesla became extremely profitable. In fact, among automakers, it has margins that are the envy of the industry. A good profitable automaker might have a 5 or 6 or 7 or 8% margin. Tesla was routinely in double digits, like 20+% profit margin. Remarkable. That is changing now. So we have seen periods of stock volatility for sure. If you look at Tesla's chart, it has gone up a lot over the years, but that's marked by some really wild gyrations at times. We're in another one of those right now. And so this current phase is the Trump phase. So it begins with the bump that occurred on November 5th when Trump won the election. The rise, and now we're seeing the crash of that at the moment. Obviously, additional external factors like tariffs, because Tesla's a manufacturer. They need steel, they need aluminum, they need all sorts of electronics, so many things that are brought in from other countries, both in North America and from abroad. So Tesla's not immune to the impact of Trump's tariffs. And so it's going to cost more to make its products. And so that adds challenges as well. So, have we seen volatility with Tesla before? 100%. There have been some very grim periods for the stock. But the phase we're in now is a little different. And the concerns are, is this period of extraordinarily high profitability that it's enjoyed since 2020 through last year, is that period ending or not? So I think maybe some people are going to sit on the sidelines for a while and see how things shake out.
Well, President Trump and Elon Musk, it's almost like they knew you and I were going to be talking about this afternoon because they had a meeting at the White House. They were talking to reporters. They were talking about Tesla, and President Trump vowed to buy Tesla. This is what Elon Musk said, quote, "As a function of the great policies of President Trump and his administration, and as an act of faith in America, Tesla is going to double vehicle output in the United States within the next 2 years." What do you think of that announcement? And do you think, how likely is that going to come into fruition? Because you wrote in your latest piece for Forbes regarding Tesla that Elon Musk does have a history of over-promising and under-delivering.
Yeah. Doubling U.S. output in the next 2 years, I don't know how that's conceivable. There's some headroom. The Cybertruck, for example, has been a very poor seller. You could use some of that capacity to build other things. But doubling their U.S. production capacity, they also have to have demand for the product. And right now they have a demand problem. They're not under, it's not an undercapacity problem. They have too little demand. I would say that is I wouldn't count on that materializing in 2 years. They have 2 U.S. plants. They have their Fremont, California plant that does about 500,000 vehicles a year. And then they have their Austin, Texas factory, which currently has capacity to go up to about 500,000, but is below that. It's probably closer to 300,000 right now. I don't see realistically how they have the ability within a 2-year period to increase production that much. So that really, I'm not sure I can take that comment very seriously at this point. It takes a while. If you are increasing production at a big factory, you have a lot of logistics. A lot of things have to be lined up. You got to get the parts. You got to get your suppliers ready. You got to staff up. It doesn't happen magically. It doesn't happen overnight. And there are local permits that you need to have, including things like air pollution. So, for example, their California plant, Fremont, it's maxed out. Plants produce a certain amount of pollution, air pollution, just from doing their basic operations. Has nothing to do with the vehicles. Just by building things, you emit pollution. Right now, Tesla's Fremont plant is maxed out. So they cannot do an additional 100,000, 200,000, and that's because of local pollution rules and state pollution rules. They're maxed out. I don't know what their ceiling is in Austin, Texas, because it's Texas. I would assume it's much lower, so it's less strict. So sure, they could probably add a couple 100,000 units of production in Texas, but short of that, they're going to have to open a brand new facility. They are adding a production line for their semi truck, which is delayed by several years in Nevada at this point. But that's not going to be hundreds of thousands of vehicles. Semi-trucks, you don't build that many a year, maybe 40, 50,000 tops. So claiming that they're going to increase by that much seems like a stretch.
Elon Musk and Donald Trump have really gone hand in hand in President Trump's second term. Elon Musk is the face of Doge. He seemingly has been working on Doge nonstop, which begs the question, does he have time to even be the CEO of Tesla? From your reporting, from what you're seeing, what do investors think about Elon Musk, as well as what you're saying he could potentially be damaging the brand of Tesla, as well as is he an absentee CEO?
Yes, he is. He is not running the company day to day. I'm sure he's getting briefs and updates, but he simply does not have the time to sit down. He's not doing extensive meetings. He's not getting the kinds of reviews. A CEO is a full-time job, and there's a reason why. Tim Cook just runs Apple. Sundar Pichai just runs Alphabet. These big companies, they're big and complex with all sorts of complicated issues about suppliers and international problems and different things that are happening. You need to stay completely focused. It is simply not possible to do everything he is engaged in and do it well. And this would perhaps also explain why there is some nervousness around Tesla, because he has become so fully engaged in the Doge project. That's clearly chewing up a lot of time. I mean, he's in the White House with Donald Trump today. That means he's not, meeting with folks at Tesla, and he's not, focused on what needs to happen with that company. And a great example of this, Tesla, their model line, the company's model line is getting old. The newest product is the Cybertruck. He said it could be selling 200 to 500,000 units a year. It's not. It sold about 40,000 last year, and that's probably the peak. So that would be a flop. If you are counting on a high volume product and you sell maybe a tenth of what you were promising, it means your planning wasn't very good. Tesla probably needs to be more focused on fresher, more affordable products, things, that are in the $30,000 price range, and perhaps they will add some lower priced variants this year. But the model line looks a little stale, and you have other companies like Kia and Hyundai and General Motors that have really fresh, interesting, new, affordable EVs. So that's creating additional competitive challenges. He's not focused on that. So I mean, one could ask objectively, why is Tesla's board, the board of a public company, not intervening and saying, we probably do need, at a minimum, a president, a COO, a day-to-day manager of the company. No one holds that title in Tesla. There is CEO, and then it goes down to like senior vice president. There's nothing in between. So he has to sign off on everything at the end of the day, and he's doing a lot of other things because it's Doge, it's SpaceX, it's the Boring Company, it's Neuralink, it's XAI. I mean, just this laundry list of companies. it is simply not realistic that he has the bandwidth or the capacity to do that.
I'm curious if you think then money talks, because let's read some numbers here. His net worth has dropped by over 130 billion since December, according to us. And on Monday alone, it plunged $23 billion as Tesla's stock price plummeted. And since it's affecting his pocket daily, do you think this is going to make him change course in any way?
No, I actually don't. I don't think that really influences him. I think he likes being the wealthiest person in the world, but I don't think it's his primary motivation. I think he's more motivated by attention than anything else. So these big hits to his net worth are clearly noticeable, but I don't know. Once your net worth is above like $50 billion, it all becomes sort of imaginary, right? It's like, is it real?
Well, and once you can lose billions and billions and still be the richest person in the world easily, yeah, I'm sure, I don't even think it matters anymore. But the market cap for Tesla is down hundreds of billions of dollars. So what do you think is the best course for Tesla? For Elon Musk to separate himself from the Trump administration, or Elon Musk to separate himself from Tesla? Or are Elon Musk and Tesla almost one and the same? Is he the brand?
He is the brand. That seems to be where perhaps the board has put itself. It's like, look, we know this is not the way it should be, but this is how it is, and we're going to have to live with it. It's really hard to find another example of a company that is so profoundly dominated by one individual. Perhaps, Mark Zuckerberg at Meta would be the closest parallel. I guess. But, Meta's not suffering quite as much in the market as Tesla has been. Objectively, if I were called in to advise the company, I would say you need a real CEO. You need a COO. You need a president. You need a full management team. And probably you should recruit some talent from the traditional auto industry, people who are expert at manufacturing. They've built what has become a remarkable brand. You cannot take away from the fact that Tesla, defines the EV market. It has enjoyed this really rare space, and what we are seeing right now is that they're losing it. It's fraying, and it's not great at the moment. It could be reversed if the right steps were taken, but it could get a lot worse. And again, because of his public role, he's wearing all of these hats, but I think his willingness to jump into the public space in a political position is a deeply unwise thing to have done. There's that famous quote from Michael Jordan back in the 90s about why he didn't come out and make political endorsements. And he said, because Republicans also buy sneakers. He intentionally did not want to be political one way or the other. And that's a rule of thumb, I think, for most public companies, which is there's really no upside to being overtly political when you're a public company selling products to everybody. You want everyone to buy. You don't want to turn anyone off. He's made a different calculation. And again, as mentioned earlier, in the case of Tesla, because if you look at the demographic data, who their buyers are, where their buyers are, they're not in red states. They're not in rural places, and they're generally not Republican.
It sounds like, based on what you're saying, based on the stock prices, Elon Musk is now tasked with making Tesla great again. And as I said earlier, one of the ways he wants to do that is double vehicle output in the US over the next 2 years. But as you said, Tesla buyers are not really a Trump base. So he's walking this interesting line here. Not as many people are buying. People are protesting Tesla. What do you think is next for the company?
Well, we'll see, because, the press conference today, Trump is now actually, because he's embracing Elon and the brand, maybe they'll see some new attention in red states. Texas might buy more Cybertrucks. I mean, maybe there'll be some response from the Trump base. We'll see, because obviously at the same time, Trump has sort of disabled a lot of the incentives and federal programs that supported electric vehicles. He's ended federal funding for public charging network. He's eliminated the $7,500 tax credit for the purchase of a new electric vehicle, and his administration is rapidly sort of rolling in or unwinding programs that flourished under the Biden administration that help people get an electric car and charge the electric car and live with it. So very mixed messages, I would say. Maybe Republicans will become bigger buyers of EVs, possibly. I'm not sure I would bet on that in the short term. I think the best solution would actually be perhaps it's time for a management change at Tesla and some new products.
Well, Alan, I certainly appreciate your insight here. I always appreciate your reporting. Thank you so much for joining me.
Thanks for having me.